Last week, the Federal Reserve disappointed investors with its meeting minutes from July's get-together. The central bank warned that the COVID-19 pandemic would weigh heavily on economic activity, employment and inflation in the near term, as well as posing risks to the outlook over the medium term. The FOMC went on to restate the need for more fiscal stimulus from Congress, which is still yet to materialise, with Democrats wanting $3 trillion in aid and the Republicans only offering up a third of that. Importantly, Powell and his pals claimed that the new stimulus measures, specifically capping certain Treasury yields, were not warranted in the current environment. It was also vague on the future of its interest rates guidance, stating that providing greater clarity on the requirements for it raising rates, be it outcome or calendar-based, would be appropriate only at some point. So nothing too helpful. But the minutes did hint that it is near the end of its longer-term monetary policy framework review focused on the elusive 2% inflation target and the potential for a more relaxed approach that would see the Fed overshoot that target when needed to produce a yearly average close to its objective. That brings us to the Jackson Hole Symposium. Starting virtually on Thursday, the event will feature an address from Jerome Powell on day one, with speculation that he could cover the review ahead of September's meeting. Investors will no doubt be paying close attention to his speech as they try and ascertain what the central bank's next steps will be. Elsewhere, if last week was beset by the economic realities of the COVID-19 pandemic, then Monday started out with a temporary cure for those concerns, namely the approval of blood plasma from recovered patients as a treatment against the virus. The FDA have granted emergency use authorization to this method based on evidence it can reduce the mortality rate of COVID-19 patients while aiding their recovery. Donald Trump was in danger of undermining sentiment as he once again labelled COVID-19 as the China virus during the announcement. However, the markets were willing to look beyond the president's geopolitical needling to focus on celebrating this moment of progress. As for the economic calendar, there's the CB consumer confidence figure on Tuesday, followed by the durable goods orders numbers on Wednesday. Thursday then has the usual jobless claims reading, which was back above 1 million last week, having briefly fallen below it the week prior, joined by a second look at the Q2 GDP data. The advanced figure came in at minus 32.9% at the annualized rate, so any downwards revision, however small, would be welcome. Any figure worse than that, however, could be disastrous for sentiment in the latter half of the week. Finally, Friday is the Fed favourite core PCA price index reading, alongside the personal spending Chicago PMI and revised UOM consumer sentiment numbers. As mentioned, however, it does really seem like this week will be Jackson Hole focused, at least from Thursday onwards, with investors very keen to see what the Federal Reserve has in store in the coming months after a fairly uninformative meeting in July and set of meeting minutes from that same get-together. I think investors are hopeful that the Fed will produce some kind of fresh stimulus in the coming months. So it could really use, or if not stimulus, then at least some kind of stiffer guidance than what they've been getting in the last few meetings. Beyond that, any other news from the Jackson Hole Symposium will probably be of great value to the markets, especially on the UK side of things, with also Andrew Bailey, the head of the Bank of England, giving a speech on Friday.